Got it. Okay. Just locking in my profit on my
Oh, naturally.
There he goes.
Naturally.
Yeah,
Yep.
I had to watch it real close. Oh, there it goes. It's taken off now. That's good. But I locked it in just as we went there.
Just in time.
Yep.
Yeah, another let's see,
Sliding into home base, if you will.
Yeah.
Right
2%.
on
Yeah,
time.
just 2% return.
Very nice.
That's
I
my
would like
fourth one this morning.
fourth.
Yeah.
Man, you're really getting rolling on those MMTs. That's awesome. That's
Yeah,
awesome.
it's just kind of going sideways. So you just like get the bottom, get the top, and
Yeah, absolutely. You're really familiar with channels, obviously, too. So
Mhm.
I feel like we don't talk much about channel trading in MMT. That could be an interesting little project we could do. Ready, I think, to bring that pattern to MMT. But anyhow, I would like to welcome everybody to the live Thursday show. Lots changing this week in my world, lots going on in everyone's world. Tim is at a doctor's appointment with his wife currently. That's correct, Joe?
Correct.
Perfect. But yeah, we have Randy here today who coaches our covered calls, all sorts of sub techniques within that, some trading for momentum, small groups. Incredible trader. Mark is our futures coach. Behind the omnipresent little icon there, but he can still hear us, I believe. Correct, Mark?
That's correct. Yep.
well,
Okay.
you can't see him because the picture's in the future.
That's right.
Okay, gotcha.
In the
Someday,
future,
someday he's going to release a picture.
Yeah. Yeah.
Yep. And with us
I'm in
also
the witness protection program, so I can't show my face.
Yeah.
I gotcha.
And that's not his real voice either. It's been
Not
synthetically
his real
modified.
voice or
The
name.
voice has been slowed down.
Yeah.
Yeah, but we're not. Don't worry, Mark. I won't tell him your name is Josephine.
Okay, let me turn it off here, Mike.
Well, first of all, that hat is something different. This is a new
No,
hat.
it's my cowboy hat.
It's
I
his
know, but I
Texas
don't
hat.
think we've seen that. I really like the hat.
Well, first time you've seen it. Oh, yeah. Yeah, I wear it, and particularly in the wintertime.
Absolutely.
And,
Yep.
Yeah, there he is.
That's fantastic. Josephine.
He's back in his cash bill. He's out hooking for rides again.
Yep. Absolutely. The cash cab, right? MMT
That's right, cash cab.
Actually,
Okay.
I'm a private investigator and taking pictures of some guy cheating on his wife.
There he is. He's the PI. He's usually slumps down in the chair there where you can't see his head while he's watching.
Good morning, Peter. Good to see you,
Yeah,
sir.
Peter, good morning. Okay, let me start it off here because I got to make a correction.
Correction.
Mark also still does, besides his features, his micro moment trading, as we do every morning for about an hour, 8:30 to 8:30 Central Time when the market opens to 9:30. And this is our 124th week, over 100% returns for every week. It's been a subscription service. We've been doing it over 5 years. And they actually, Mark and Cezanne and Tim, actually trade our corporate account plus their own monies. These are real trades. And to show you the advantage of this technique, and number one, when you attend those seminars, they teach you how to do it. They're just not they're doing real trades and you can follow them, but they're teaching you how to use our proprietary charting to decide when to get in and get out of those trades. That's the whole deal. And the trade typically is going to last from 15 seconds to a minute. Now, given the state of the market this past week, it's been up and down and all over the place. It was up a little bit yesterday, and it's up a good time today, but it's had some previous downs all week. We are up for the week so far, Monday through Thursday, 100 and hold on a second, I'll tell you exactly what it is. 198.3957%. So we've been averaging over 200% per week. And so tomorrow, Friday, we only got 11 points to go or something like that. And we'll be over 200. So we'll probably be 230 or 40, which is what we've been doing. Last week, it was 200, almost 300%. Anyhow, today we had returns of 41.1683. Monday, which was a big negative day, we had returns actually of 52.5239. So it doesn't make any difference. The reason it doesn't make any difference is we're not trading anticipated gains or losses in a stock or a fund. We're trading volume. And the volume goes up and down every day. It goes up positive, it goes down positive, it makes absolutely no difference to us what it does. And that's what we do, and that's micro moment trading. And you can find all about it on our website.
Yes.
Now, and I'm going to let Randy, who he's over there doing trades, being a big shot right now, and I'm going to turn it over to him. And and by the way, for all those vastly interested in my physical condition, I went to the doctor yesterday, full clean bill of health on my broken leg, and said I didn't need to come back for 6 weeks and probably just stop treatments after that. So I'm going to go out dancing tonight and riding some cattle. That's what I've got on my cowboy hat. Riding some cattle. We this is the time of the year we have rodeos here in Fort Worth. So I'm going to turn it over to.
So Joe, does that mean you don't get your Swedish nurse to come give you the bath anymore?
That stopped last week.
Oh, you're all disappointed now.
All I can say is I'm extremely dirty.
Yeah.
Yep.
Okay. To clarify those returns, that is between, you have 3 traders on currently MMT. So I like to clarify that is between the 3 traders. Really killer week. I mean, we can go for about 6% a week and do some really incredible things. So I mean, even that divided 3 ways, that's a really, really great place to be. Fantastic. Randy, how is the covered calls going? How's your week looking? We're just about to the end of it, but it's been going well, I hope.
Good. Yeah, actually, because I was anticipating a really rocky market this week, so I didn't put on a whole lot of trades for this week. So far, really only I entered three positions, actually 4 positions. I've already closed one of them out for this week. Looking for a down. If the market takes a dip today, then I'll get in some to close out for tomorrow. But with the fiscal uncertainty out there, so much of it heading into this week, I was more conservative and just said, I'll kind of hang on, wait to see where it goes. We had the FOMC meeting that had the announcement yesterday, where it went down and back up and then down and back up, and today's kind of a continuation of going back up. But we've had down market. I think the last 3 weeks they say that the market was down 3 weeks in a row, and I'm just waiting for it to kind of get to the bottom and maybe start going up. And so it looks like maybe we got there because we got through a couple of the big financial potential time bombs out there. We're past those, but we'll see where it goes from here. So all of the positions that I put on for last week were closed out for full profit in return of all the capital, except for one. And one of them I had to manage into this week, and that was a GE. And GE is up $4.72 today. I'm now $5 in the money, and so it's highly likely that one will close out tomorrow for, I think, about a 15% return over the 2 weeks, even though it declined about $5 a share from where I entered it. And because of management, it allows to work through the cycles, and that's what stocks do. They go up and down, and if you select a good, appropriate one that has a rising cycle and at a low point and a good, solid quality company, then management continues to go, generating additional income each week, and then closing out when it starts cycling back up. Doesn't have to get back to where it started. In fact, GE actually is probably about where it started, but it had dropped quite a bit. And so that one will be closed out. And the others that I entered for this week are all well in the money. And that's what we try to do. So covered calls, when we do a covered call here at Micro Moment Trading, it's not your covered call that you listen to on TV. It's kind of like almost the opposite. We generate income on a weekly basis for with the covered call with the goal of being called out. Now that's not what they want to do on TV. They use it as a defensive thing that, well, it's nothing else is going right. I might as well get a little bit of income by selling an out of the money call that I don't want to be called out at. But that's not how we do it. We select in the money to start with, meaning that the option that we sell, the strike price, which is the price that you have to sell your stock at if you get called out, it's lower than the price we're actually paying for the stock. But Joe talks about the rent. The rent that we get by selling the call, another call against it, is greater than the amount of the decline that the stock will have. So you get all your money back and keep a profit, even if the stock goes down. It can go up, it can go sideways, or it can go down, and we still get called out. And that's the goal. Be called out by the end of the week, have all your cash back, sleep well, rest well over the weekend, not giving a care of where anything goes, and then we start all over again the next week to generate income. So
I have a question, Randy. So for the brand new people on here as well, we talk a lot about covered calls. A call is an option that increases in value as the stock goes up, right? There's calls and puts. What could you give a super base so that we know how it's different? Could you give a super basic definition of what a standard covered call is? And honestly, what makes it covered? What does covered mean?
Yep. Well, a covered call is an industry thing. It's not nothing that Joe created. Joe just came up with a good way and a conservative way of using the covered call to generate back then monthly income, now weekly income.
Yeah.
But a call, when you sell a call, you incur an obligation to sell your stock at the price that you set to start with. So if I sell a $10 call against GE, that means I have to sell GE at $10 if the person that buys it says, I want to buy the stock at $10. They're going to pay me money up front for that right. So they're kind of renting that position. What makes it covered is we don't just sell a call. That's the most risky thing you can do probably in the stock market is just selling a call.
Yes.
Because
the reason
you
for
have
that infinite loss potential.
Yeah, you have infinite potential loss because you're setting
naked call.
Yeah. You're setting a price that you have to sell stock at, and if you don't have that stock already and that stock triples and quadruples, you're left having to buy it for a real high price to sell it. So what the covered call is it says you already own the stock. So the stock is covering the call that you're selling. So you own the stock and you sell the right for someone to buy that stock from you at a set price. And then the option has an expiration day. And you select when you want that to expire. How long do you want to give somebody the right to buy your stock? Is it 1 week? Is it 2 weeks? Is it a month? Is it a year? And so you select what is the price you want to sell your stock at and what's the date that you no longer want to have that obligation. And when you sell that call, you get a premium right up front. You get cash into your account immediately. And as long as the amount of cash that you get plus the price you're going to sell the stock at, when you add those two together, if it's greater than the price you paid for the stock, there's your profit. And so we sell an in-the-money call, which means a strike that's lower than the price we paid for the stock. So we get more money up front, and it increases the probability that we'll be called out. Because our goal is to be called out. We want to sell our stock at the end of that period and get all of our cash back and keep the money that we got up front. And the total of that is more than what we paid for the stock. Now, some people own stock and they don't want to sell the stock. That's okay. We have another technique where we do sell out of the money calls, which is a price higher than the current price of the stock, so that you can generate income, but we have a technique to make sure that you don't get called out, that you don't have to sell your stock, that you can just keep generating income on a weekly and monthly basis against that stock that you own. Um,
Right.
and so it just increases your returns dramatically over the course of the year.
Joe.
Yeah, he's 100% right. And one even simpler way of thinking about it, this is what gives him the opportunity to do those various techniques, is that you look at that stock like a piece of real estate, an apartment house, you look at that call as rent money. That's a renter. And all he's doing, what he's doing is he buys that stock and then he sells that call for a certain period of time, which he selects. And that's rent, like rental income. And he can sit there and take the stock and rent it forever.
Yep.
But because he does that one thing, that enables him to do many other things with that stock in the event it goes up, down, or he just wants to get out of it or not get out of it forever. But just that the stock's real estate and the covered call is rental income. And then everything he said derives because he does that. So.
Yes. And the option itself, right, is an option. I know that sounds silly, but when you Google the definition for an option, it doesn't actually have the word option in the definition. It's the right but not the obligation to buy a yada yada at a certain time, right? It's this, and you have to kind of unpack it to understand it. An option is literally the option to buy the stock if you want it. It's just reserving the price. It's like, reserving that your spot.
It gives you a choice.
Exactly.
You have a choice.
Exactly.
When the person buys that option, so if we sell it, there's a buyer. So that buyer has the right but not the obligation. They have the choice. They get to decide that in the future, do they actually want that stock or do they not? They're paying money up front that they don't get back. They're paying money up front. That's the rent, like Joe talks about. They're paying that rent to rent that right for however long that they decided that they wanted to. And then they have to make the decision, do they want to exercise that right or not? And the neat thing about it, Joe, because you talk about the rent, by selling weekly calls, you get to change the rent every week. Like if you rent a house out, you have a 1-year lease or whatever, you're only getting the same rent every single month. It doesn't matter what the rest of the world is doing. But with the covered call, you actually get to change the rent every week. You get to make a new decision each week. What's the strike I want to sell? How much is the income I want to get?
And Randy, it's even deeper than that, because that piece of real estate, that stock, that piece of real estate, you can buy and sell without a listing contract.
Yeah, that's right. and now there's actually no commission at all for buying and selling the stock. It's there. You don't even have to pay the real estate agent or nothing about that.
You guys are one of those hardcore landlords. I see how it
That's right. That's right. We are. And there's no restrictions on that.
I'm thinking like
no, but I mean that's what Randy's saying. I mean, Randy, right? I mean that changes things a lot. But when we used to do just a monthly covered calls, the weeklies really made a difference, because now you can really compound your money even more, and you have this extra cash flow that you never dreamed to have. So this is really great. So.
The weeklies that came out in 2010, I think, is when they started having weeklies. It's taken a while for them to expand the number, but the weekly option, you're only selling that right for a week. You're renting by the week. So what's that, like Verbo or whatever, the vacation? So you get to sell you get to rent your vacation house out every week. You get a whole lot more by renting it out by the week than you do
houses are stocks and options are Airbnbs. Yeah,
there you go. And so, Mark, absolutely, the weekly options, it gives so much flexibility and the ability to generate that income every week and not having to just wait for once a month, because that's how when we started. And same with you, Mark. You started a long time ago. We would rent the stock for a whole month and just have to wait till the end of the month to see what's going to happen. Now it's every week, and it's just increased dramatically the ability to generate that income.
Yep.
And the neat thing is with the new administration and everything, if you don't get any income, the government will send you a check for it.
Well, that's what they say. All those Robinhood traders, they're just taking those checks the government sent and they're reinvesting them, and they're making a ton of money now because they're able to trade.
There you go.
Absolutely. Absolutely. Any questions at this time? Anybody wondering about anything that we're chatting about on here? I wanted to bring it back to the basics a little bit. We haven't gone over much of that lately.
One thing I'll give an update, because I think a couple weeks ago I kind of talked about the results so far for this year that I had presented at the Masters, and I talked about that 185 positions that were implemented from the 1st of December through the middle of July, because that's when I was making the presentation, that 165 of them close out in the first week. That closing out means all your cash back that you had originally invested plus locked in returns of between 6% and up to 25% just for the week. All but 2 of the rest of them were closed out in subsequent weeks with the management, increasing the returns and still getting all the capital back. And I had 2 that were longer term management. One was on VXX, which is the volatility index ETF, and the other was TLT, which was a 20-year treasury bond, government treasury bond. TLT closed out last week. So now I only have one, and the one that I am managing week after week after week, I'm doing that on purpose because the VXX is supposed to go up if the stock market goes down. So that's kind of like, I guess the industry would call it like a hedge, but I'm generating income on a weekly basis with VXX while waiting for the markets eventually going to go down at some point, because it does. That's what they do. They go up and down. We haven't had a major decline of any more than 2 or 3% in like almost a year. So we had a taste of that earlier this week, right? Monday, big decline, and that VXX shot way up, but now the market's rebounded and going back up. So VXX is down, but that's the only other one that is in management. Every other position that I put on has closed out for a profit.
That's fantastic. That's
stellar, man. Stellar stuff.
That's all he does is brag.
Yep.
Just the facts, Jack. Just the facts. No, is it just the facts? What is it?
Just the facts, Jack. Yeah.
Is it Jack? Just the facts, Jack? That's Mark. That's from way back. Wasn't that from
the movie Stripes?
Was that from Dragnet?
No, the movie Stripes.
Oh, the movie Stripes. Okay.
Okay. No, but also you're right. No, also they had it was actually way back to Dragnet. You're right. That is right. That's when it first came out. Actually.
Yeah. I think it was Dragnet. Way.
Just the facts, ma'am. Just the facts, ma'am.
There it is. Just the facts, ma'am. Yep. It's just the facts. Now, future success.
We're talking about past, that Mike has never seen in his life.
No. But I also want to say, past success does not guarantee future success, right?
True.
So, I mean, that's what I do all week is work towards selecting positions and then managing them if required in order to get them closed out for a profit as soon as possible.
And about how many hours a week do you think you spend?
Since
time obligation. I know it's more for you because you teach and things.
Because
had you not been teaching, where would you be at, roughly?
For me, I teach. I mean, I do all the different techniques. I do the micro moment trading, which I've already done 4 today. I do credit spreads. I actually have a credit spread on right now on SPX. I do all the covered calls, and I do the momentum trading with advanced charting. So, I mean, I'm kind of just in the market. Now, I don't have to be every single second. So, like sometimes, like Tim is gone, taking his wife to the doctor. I've gone twice already this week to the doctor with my wife and a couple more. So next week. So I have baseball practice. I have games.
Yeah.
I'm not locked into the computer. If I was just doing my own trading and not teaching anybody else and not answering their questions and coaching and guiding them through, if I wasn't doing that, it would be an hour a day. I'd probably be spending about an hour a day.
Yeah, let me tell you, we spend on the micro moment trading exactly and precisely 5 hours or slightly less a week. An hour a day or slightly less than an hour a day. I've never seen us go over an hour for the day. That's all we spend to make it over 200% a week. And what's coming up, and Mark, we sent out a lot of information in the coming days on is our new futures program, which he runs. He knows all about futures.
Yeah.
He even has a better schedule because he can do it on the weekends except Saturday, and so and 24 hours a day. So he shows up every morning. We talked a little bit before we start the micro moment. He says, "Well, I just did a few future trades, made blah blah blah," and it'll be like 7:15 in the morning, or something like that.
Yeah.
Make like 50 points, times 20 and that's like that's $1,000 in one contract. The contract is 10,000. Do that sometimes in 10, 15 minutes, you're done.
Yep.
Yeah.
I feel like it would be great for international travel of any sort as well. Like if you are,
Oh, yeah.
crossing time zones, just as a person with that type of lifestyle, that'd be probably really, really useful. Yeah,
Well,
we're gonna chat quite a bit about futures because that was our cow report this week. So
Yeah, and that's a great thing about the futures. Like Mark said, or Joe said, like 7:15, he's already made his trades. But
Yep.
there's people, especially like on the West Coast and the Midwest, that they'll do some futures trade before they go to their regular job, and they'll generate extra income every morning with the futures trading, because futures are 23 out of the 24 hours a day, where the stock market is 9:30 in the morning Eastern time till 4. It's set. The only time that you can trade options is in those hours, but futures you can trade at other hours. So you can kind of adjust when you want to do trading based on anything else that you're doing. That's what's so fantastic about the futures.
Plus, you can take advantage of pre-market conditions, right? So a lot of times, by the time we get to the market, it opens up 200 points, 100 points, whatever, right? 400 points, and it's already that's already passed, right? So people that are doing stocks or options at that point, they're catching up to the game, right? With futures, you're ahead of the game. Really, is my point.
Yep.
Hey, Micah, let me answer Peggy's question there.
please.
Okay. Now, Peggy asked, does the toolbox have a way to search specifically for weekly options? Absolutely. Absolutely. In the toolbox, it's right there. All the options, weeklies, monthlies, however. So
Is that the screener, Joe, or what tool?
No, but
it's in the toolbox. The toolbox itself.
well, the options chain is, but as far as the screener to search for a new position, it uses the monthly premium to do the calculations.
Yeah.
But the easiest way to do the weekly options is if it shows up, you look at the option chain. Does it have options for every week or does it not? You can also go out to the CBOE.com, which stands for Chicago Board of Options Exchange, and you can download a list of all the companies that have weekly options. There's last time I counted, there's just over 300 companies. There's almost all the ETFs have weeklies, and about 300 companies. But they change every week. They change what companies are on that list. But you can download that, and those are all the ones that have weekly options.
Yep.
Then you can use the toolbox to verify the fundamental and technical requirements that we're looking for selection of a new company, and then simply look at the option chain. And if they have weekly options, you could decide to sell 1 week. It depends on how much work you want to do, right? Do you want to select a new position every week, or do you want to select a position once a month? And so you're going to have 4 times as much work if you do weeklies than if you do monthlies. So it's flexible based on the individual of how much work and effort do you want to put into it versus what kind of returns would you desire to get.
Okay,
So
now
Weekly, you compound more potentially, right? So
well, and so weeklies are great because it takes a little more work, but you get to use the same cash multiple times in the month to generate income instead of once a month if you're selling monthly calls against it.
Let's get back to Peggy's question. Does the toolbox have a way to search specifically for weekly options? And the answer is yes. Okay, so at least Peggy knows. I mean, Randy, goes off on extremes.
Well,
Of how to do it.
explain it, but
different ways to do it. I agree. But I mean, that tailoring process to your schedule is the ultimate thing. I think that will be a perk of futures is the liquidity, right? Because the options market, so the MMT, the market we trade is open for a lot longer than we would ever trade that because of the technique. Not because necessarily it's not that the market closes, right? But the first hour is when we have the volume and the liquidity. The market may be open past that, but on those days that it's lower volume, it doesn't meet our requirements to trade. So there's market time, and then there's viable trading time. And with futures, we're going to catch a few more of those, like pre-market conditions, like news that comes out, outside of regular market hours, things like that, things in the evening that you never have access to with options.
Right.
And legitimately, we only like, we prefer the first hour, and then there's like an hour around, probably 2 hours before the market closes, an hour before the market closes, that kind of has usually when a lot of announcement comes out. Usually Fed rate decisions come out around that time, but it has this kind of renewal of liquidity and volume that we need.
Pay attention. We pay attention to that. Some days, are better than others, right? It just kind of depends what's going on in the market. But those are the times you kind of see things that happen depending on what's going on in news and otherwise throughout the the world, I guess.
Absolutely. So that'll be a perk. And speaking of futures, this was an article that we had on our cow report. So every Friday we release a cow report, and it has the topic for our next Thursday's podcast. It's a free report. It's been published for over 22 years, and you can just find that on our website for free. I encourage you to sign up for that. But this week it was on futures. Let me get my copy here. And Mark, if you kind of want to give us a general framework of what was covered, you got some sections here talking about how it relates to home buying, speculation, and then the components of a contract, which I'm really interested in. If we could spend some time on that, breaking down.
So that's the one that was that. That's the one where I talked. That's the one where I talked about wheat, I think, right? Too about wheat contracts.
Yes. Yep.
Yeah. So basically, it's just a synopsis about futures and trying to get people a little more familiar with what futures are if they don't know. And some people may know, right? But futures were developed around the commodities, and wheat, corn being some of the big ones that are traded out there. It allows you, to buy or at least to lock in a price if you're a farmer or you're a big, buyer of this stuff, and utilize that to know where you're going to be financially for your company, maybe for the next month, week, year, whatever, and locking these prices. And so these are future contracts. And the contract is, if you buy a contract, you're obligated, right? Obligated to take delivery upon execution. But most people now, we buy and sell them. So this whole article really, talked about wheat and then the components of the futures contract. What does that mean? These different multipliers that are in some of these contracts, just like we talked about mainly for us, the indexes, but S&P 500, the NASDAQ, like S&P 500 has a $50 multiplier per 1 point. The NASDAQ /NQ ticker symbol has $20 per point that you make out per point. I'm sorry, per point on the future contract as it goes up in value. The other point in there was there's future contracts, not just on corn, wheat, and everything. There's futures contracts also on interest rates and bonds and everything else. So you could buy these contracts to offset things in your life. And the example there was about a mortgage. If you're going to buy a house and you were unsure about prices, you could buy this futures contract on, the interest rates or the mortgage, or what do you call it, the bonds, I guess, to help offset that. Do we do that? Typically, as people know, and that was kind of my point at the end, the commentary is that we don't have to worry about all that stuff. We're going to trade these indexes that are cash settled, and we're going to buy and we're going to sell them. And for us, it acts much like a stock. But like we've been alluding to today or talking about, there's greater time frames in which we can trade this around, 23 and a half hours, 6 days a week. And so we can participate in market movements that happen before market, after market, but we're buying and selling these. We make our profit. We set a goal, make that goal, and we're done trading for the day. Sometimes in an hour, sometimes 15 minutes, and then we go back to cash, and we're done for the day. That's really a great, addition, I think, to what we've been doing and teaching here about generating cash flow on your existing portfolio.
Absolutely. Yeah, it has a lot of clarifications in it. But even the way you explained it, I appreciate that about the purpose of it for farmers, because I was curious about and I think a lot of people wonder, well, what's even the point of futures? Why do you have to trade the future price of something ever? Like, it already has a current price and it's already moving. So I think that's a really good clarification.
Yeah, that scenario in there, they talk about the wheat, right? The guy has so many bushels he can get from his field. He wants to lock in a price to be profitable. He has to have so many, be able to sell so many at such a such price, right? And that's where he negotiates that contract essentially behind the scenes. So it's kind of cool.
Hey, Mark, don't they still trade on the floor with yelling and all that kind of stuff in Chicago?
Didn't you watch Trading Places?
That's right, Eddie Murphy or
Yeah,
and
Dan
John
Aykroyd
Aykroyd, yeah.
and Eddie Murphy down there with the what were those brothers called?
What would be? I mean, but they still do that, don't they? It's just not all.
Yeah,
like,
that's an open outcry market. So some of the stuff is still done that way, right? And so
Yeah.
that's a little crazy stuff that goes on today. You see these people. I know this guy. He said he was a pit trader like that. He hired the biggest dudes he could. They were 7 foot tall and they had shoulders about 80 inches wide. But he would grab that guy, have him lead him to the center of the pit so he could take the oars and sell oars and make his profits off his trade.
Walking around.
Yeah. So, but nowadays, with the indexes and stuff, what we're doing is they're electronic, they're cash settled, so we don't have that problem, right? It really gets rid of some of the other stuff in the market that's happening and makes it more just transparent, I think.
Yes. Cash settled meaning, could you explain cash settled?
Okay, so yeah, so if you were actually buy a futures contract and Randy or somebody bought his SPX and he held it overnight, so the next day he wakes up and SPX, his futures contract where he bought say on it, went down 10 points. Well, okay, if it's 50 times 10 points, he'd be at a loss of 500 points. So it'd settle his account at the end of the day at that point, and maybe in the morning, if it opened up, there would be this adjustment to his account based on value, right? So it's mark to market, and your account is settled in such a manner where they take money away or put money in depending on the value of that futures contract each day. So to avoid all that, we don't hold that stuff overnight, right? We trade it during the day, buy and sell, and then we're back to cash every day.
Yeah. It's kind of like if you were going to take a check to a bank, it would take a day or two to clear. Whereas if you deposited cash, I mean, they know you have the money to back it up. They're not going to doubt that they have the cash in their bank now. So you immediately have access to those funds in the digital route, right? So if your trading platform was your debit card, then it'd be like depositing a cash versus a check there. So
yeah, and the other thing too is with futures, you don't have the pattern day trading stipulation where you have to have so much money in your account. There's restrictions. None of that exists for futures. There's no limit. There's no restrictions on it like that.
Interesting. But you can, I mean, if you're cash settled, you still have to wait for that cash to settle over the 1 day, right? Or
no, it settles right then. You're done.
So multiple times a day then?
Yeah. So if I made a trade right now and I made $100, I can take that $100 out right now. It's done.
Or reinvest.
Or reinvest, yeah. So I mean, it happens instantly.
Because even on a cash account, so it'd be like having access to a margin account over 25,000, Mark.
So it's when you're trading the futures contract, they're cash settled. Time from when they're bought and sold. They do the bookkeeping. That's why the market. I'm sorry. Yep.
So a stock cash settled account, you still have to wait that day for even the cash settled to clear, but you don't have that in futures.
No, you don't have it.
Wow, I didn't even realize that. I heard you talking about that, but I didn't fully connect the dots. That's really cool. So basically, what we're talking about is even if you are in cash on options, say you have $1,000, you don't have to use a margin account, which is basically just debt. You don't have to do any of that stuff. You can just trade that $1,000, but you can only trade it once that day. So if you trade the 1,000, you can spend $500 twice or $1,000 once, and then you're done for the day. Mark is saying that you can, as soon as you pull out that and sell whatever position is the 1,000 is wrapped up in, within the same day you can use it again for another purchase.
You're back to cash, and that's what we do. So that's what we do. Because with futures, in futures there is margin. It's leverage, right? So say you had an account with $5,000 in it. You're trading the NQ. Requires in our discount broker that we recommend and use, it's $500 for that margin per contract. So for $5,000, I can trade up to 10 contracts, and I can have multiple orders going on, buying and selling, close them out, buying, selling all day long. I don't have to stop and wait for any cash settlement, anything like that, right? It's immediately settled when the order is closed or open, depending on if you go long or short. But
so then you're just open until it becomes whatever is your technique, right? We still don't want to overtrade or anything like that, but it gives you the freedom to do it until you
No, yeah,
gain
you can become a futures. You can easily become a futures junkie, right, and just trade 24 hours a day just because you wanted to. But that's not the point, right? So
Yeah.
what we recommend people is they set a goal. How much do you really need a day? What is your goal? Is it $500? Is it $1,000? Is it $10,000? You know, depending on your skill level too. You want to start lower and then work your way higher. But you start with one contract is what we always recommend until you understand what's going on. Plus, we have this simulated sim live account. They call it. It's live data in a sim account that is very realistic, and it allows you to practice that and get to know the platform, and also to learn the techniques that you can actually be successful once you go live.
Are the simulated fills actually like accurate with futures?
Oh yeah, it's very, very, very accurate. Yeah.
Okay, good. On options, they're just not where it actually is. I don't know. I've had a lot of struggles with simulated accounts on options.
In TOS, well, or delayed, especially delayed. Like in my TOS account, I had to call up and say, "Look, I don't want this delayed data. Give me live data." And they did that for my TOS account. So if you want to practice, as we recommend, even all our other techniques, ask for live data, practice the simulated account, so you can, especially, understand the platform. One, know how to get in, know how to get out, and then before you go live, actually start risking some real capital. So.
Yeah. I mean, that's a real factor, right? You get used to it after a while because you click those buttons so many times, but before you can talk technique and how to get, how to get a positive trade based on the chart and what the chart is doing, you have to know how to enter the trade, how to size it up. What if you get a partial fill, right? What if you have an order open for 10 contracts and you get 7 of them? Yep. What actually happens, and how do you actually, which buttons do you press to clear those other 3 or adjust the price on them? How do those really, hard details work, and how do you go about that? It just takes so much stress off to just do it in a virtual account with simulated money. It's in real time, but
I think also show the power of the futures is the same with micro moment and compounding. If you just took $2,000 and you could do it, and Mark will show you how to do this. But 2,000 in the futures account, and if you just made 6% per week, now that is nothing compared to what Mark makes in a day in one trade. But just 6% per week in 2 years, if you traded one day, for just to make 6%, which is nothing, you'd have $580,000 in 24 months.
That's crazy, right? That's pretty cool.
Assuming you can get liquidity out.
Oh yeah.
Oh yeah. No problem with futures. No problem with futures.
You can pull it all out any day. But you just start off with 2,000. Never put any more money in the account, in the futures account. Not a penny more. Just keep compounding that, and in just 24 months, and that's 6% per week. But these guys over here, micro moment, Mark, they make 50% a day on average. 50% a day, not 6%, yep. But 50%. And probably the potential with the futures is going to be even greater. So
yeah, definitely.
Yeah, I'm looking forward to learning it. We probably haven't docketed the next futures workshop, have we? Because we just had one.
No,
it was just last month.
Yeah, about last month, so a couple weeks ago, I think, or more. We're trying to set up the one-on-one coaching, setting up the one-on-one coaching for this. Then we'll have the one-on-one, the live trading room kind of atmosphere like we have with the micro moment trading, so people can follow along and help learn how to do the technique, right? So they can get proficient at it more quickly.
Absolutely. And are you going to have a coaching service or just the workshops on that?
Yeah, coaching. Yeah, coaching too. Yep. Mm-hmm.
Okay, great.
Matter of fact, that's almost set up.
Sorry, you're breaking up a little bit.
Oh, I'm sorry. The coaching is almost set up. I saw some email traffic today where they're getting the calendar and everything put together, so I can schedule those.
Nice. Very nice.
And Mark, if you really continue to be successful in stuff, you can get out of that cash cab.
he can go. He can start living in his house again, right?
That's right.
Move on from show business. That's true. I've seen you in your house like one time, Mark.
Yeah, I know, right? I have other projects when I run the area here, so I'm always driving around. But yeah, it's kind of like Uber. They want you to they can buy you a car, right? So you can drive for them, right? But then you become an indentured servant, right? Because now you got to pay for the car, so you have to do more rides to pay for it, right?
Yeah, they keep you. But you mentioned
like that, I think.
You mentioned workshops and micro moment trading. I believe this Saturday, day after tomorrow.
Oh yes,
I think Tim is teaching the micro moment
yes.
trading again.
Yes,
Good
that
point. Right.
is
Yeah.
the date on that, Randy.
This Saturday, the 24th, I
This
believe.
Yeah.
Yeah.
It's a
25th
one-day
actually.
seminar
25th.
from 9 to 4 or 5, something like that in the afternoon. Yeah,
Yeah. On the
Yeah.
25th, it's Saturday from 9 to 5.
it's on the
He's
website.
gonna correct. Yeah.
Yeah, the 25th,
He's gonna go over a lot
Saturday.
of detail.
Day after
He's
tomorrow.
gonna go over right. He's gonna go a lot of detail about that's really specific about how he got into a trade, when he got into that trade, why he got into the trade. Be real trades, but going over in detail that he's done, during the week. And I think it's really helpful to those people who've never seen this before, or even those that have been trading for a while. Just like the masters, he introduced some new stuff, and it really helped a lot of these people that were kind of struggling a little bit, increase their profits and help them, be more consistent in what they were doing.
Yeah, the consistency is I mean a key, right? It's always important in trading, but especially for micro moment, that technique itself, right? When you're doing small trades very quickly, and quite often, honestly, you do multiple a day. Um, for something like that, it does. I mean, consistency is absolutely key. So it'll be really helpful to learn about, what factors to focus on and what actually takes priority. There's a lot of things on the chart, and they are all important, right? But some things are going to take a little bit of priority over others. Like if M1 has a really sharp correction, it's going to matter a little bit more to me than E3 in that moment, right? If something changes right now. So you won't necessarily know that walking into it. So it's really good to get a view on what's important when you're looking at that chart. Yeah. No, I'm really excited for that. Looks like we lost Mark.
Oh,
Oh,
Pardon
But-
me.
but also for those that are learning the micro moment trading, and for those that would attend the workshop that Tim's teaching this weekend, a good portion of what you learn from that is kind of transferable over to futures, because you're going to use the same type of charts. They'll just be different equities that the charts are on, and you'll be learning getting in and getting out. But then Mark will add on to that for the futures trading to say, now, how's that specifically apply to futures, which is a little bit different, but a good portion. If you're experienced at micro moment trading, you should be able to get up to speed on the futures trading a lot faster.
Yes. And I believe we will be continuing to analyze the charts for that, right? There's a bit different movement, bit different flow, a lot more liquidity and volume. So I think especially in the volume indicator area, I think we have some ideas on how to even improve that more so on what those charts currently are for options, and even tailor them a bit more to futures than they are. But he's currently trading on them, so any improvement is literally bonus. That's
Yeah, I've actually been doing some virtual trading on it using our charts too. So
on
Um,
futures.
mhm.
Nice.
Yeah. It's
Do
working.
you have any first
pretty good.
impressions for us then?
Do what?
I didn't realize you were trading it yet. Do you have any first impressions for us? And
you shouldn't have asked that. You should not have asked that.
no,
No, see, I don't think we have enough time. No,
Go ahead, Randy.
it's working pretty good. I mean, I've virtual traded, I think 4 different days, and I've made a profit every day. So
awesome.
um,
Does it seem fast paced or slow paced? Does it seem how's it feel?
it's about as fast paced as the micro moment trading. I mean,
Oh really?
yeah,
Okay.
except that micro moment, I think Tim is in and out like in 30 seconds. Where on the futures, it's more like maybe a minute, minute and a half, maybe 2 minutes. Because
it's a little bit longer time
getting
frame,
in,
right? Even our charts are a longer time frame. They're
Yeah.
3-minute charts, right?
Yeah.
So it's a little bit longer. It smooths things out a little bit for us. So.
Yeah. It's not like you blink and you're out. It takes a little bit longer, but it's not like an hour, you're you're out of the positions fairly quickly.
Nice.
Correct. Yep.
Nice.
And there's a lot of things that Mark teaches by using stops and that type of stuff to, to manage your positions. But
And we
it's
have target points, so we have limits out there. We have stops, like you're saying, and you can adjust these as it moves along, and it helps you stay in that trade a little bit longer, right?
Yep.
When things do turn around, you're locking your profit, and you're done.
Yeah. So there's more kind of managing your position than there is for micro moment trading. There's more activity that you can do while you're in that position, and that's the thing that you really got to kind of learn and take that direction from Mark and get the coaching and training on that. But yeah, I mean it's fun, but virtual trading's always fun. So the practice is always really fun.
Exactly. It's like the video game, and we're learning how to drive.
Yeah.
Motorcycles and cars.
If you run off the edge of the road, it doesn't really damage your car.
Exactly. Yeah. You just respawn.
Yeah, but I mean, I'll virtual trade it for a long time to really get comfortable with it. But I'm waiting for Mark to come out with his.
And comfortable is a good point. There's a friend of mine. I tried to teach him how to do this. I was like, "Get account set up. Get your account set up. Do this." And he's like, "I'm afraid. I don't even want to do the simulation trading. Like, you're not going to lose any money. The simulation kind of allows you to practice. Do this." And so he's never done it yet. I was like, "Oh my God, never mind." It's crazy.
Yeah.
Yeah. So you do the virtual trading to kind of get used to the flow of stuff and how long it takes and what do you feel like when it's doing this or that. And you need to get comfortable with that before jumping in with your real money. And then you just start with a small.
Yeah. So that's martial arts most of my life. So the instructor used to say, when you start a new technique, it takes you 1,000 times to memorize it, but it takes you 10,000 times to know it. And so by being in that simulation account, practicing, you get to know these techniques. So there's subconscious to almost think about, right? How do you get in? How do you get out? And that's what you want to be at, right?
Yeah. I mean, well, once you're there, you can start to analyze what, when you're actually getting in and out and why you're going about that process at that time. But yeah, the consistent stuff that literally is the same on every trade, which buttons you press, how you size in, how you do those things has to be, you got to be pretty familiar with it, which is fantastic for us. Well, I really appreciate everyone being here today. That was a great show. It's a great day. We're at 52 minutes now, so we're probably going to wrap it up here. But yes, the MMT, and it's just a 1 day workshop is
Saturday. It's Saturday.
This
Saturday.
Yeah.
So we're probably closing up. Usually we don't allow signups the day before for clearing to make sure everyone gets their links properly. Sometimes we extend it, but if you're interested in that, I would go check that out at micromomenttrading.com pretty quickly. We're going to probably close that down either at midnight or about noon tomorrow. So
probably noon tomorrow. Noon
tomorrow. Sounds good. So yeah, go give that a look. And we talk about micromoment all day on here, but if you are curious about what types of trades we're doing or even what Tim's voice sounds like, so if you know it's going to be enjoyable, I recommend you go to our TikTok. We've got a bunch of videos on them of him just going through a live trade, his entry, his process, and then his exit. Mark does a bunch of trades on there as well of that technique, and it just gives quick little snapshots of what it's really like in the day-to-day. So it'll be more teaching based on Saturday, but if you're curious what the trades even look like or feel like, that's a great resource to go check that out. So
and Tim, Mark, I hear on the radio a while ago there's a lot of traffic down at 4th and Main. You might try going down there and see if you get some.
maybe so. Yeah. The airport's always good though.
Yeah. Fantastic. Alrighty, guys. We will talk to you soon. Again, go to micromomenttrading.com, sign up for the Cow Report, and tomorrow you will get our topic for next week.
Yeah, and hey, next week, besides the topic for next week, but I'm sure we'll have a lot of feedback and stuff from this weekend too. So that'd be good.
Yes.
So,
Yeah.
nice.
And
Yeah.
and we'll get Tim on here next
Yeah.
week.
Well, he'll be here. He just had to be gone. So
Good.
okay, bye bye. See y'all later. Thanks a lot.
Sounds good.
Bye.
Take care. Have a great weekend.
Bye.
Thanks,
Great
everyone.
weekend.
Thanks, guys. Take care. Yeah.